Axel Merk from Merk Investments. They invest more than $700 million in the currency market. He has stayed with the euro, even as low as $1.18, up to where we saw just a little bit ago, all the way up to about $1.50. But I guess he has changed his opinion. He joins us now to talk about it. Axel, you are now selling the euro. Why?
Well, we've been reducing our euro holding a bit in recent weeks. We actually started selling it more aggressively yesterday after both the European Central Bank came out more dovishly in anticipation of the transition to the successor Draghi. We decided that any interest rate cut may come earlier than later. And then also because we saw more opportunities elsewhere as Bernanke is really trying to increase the anticipation for more quantitative easing. And so we reallocated money to Australia in particular. But then after the Jürgen Stark announcement this morning, we became far more defensive and substantially reduced our euro exposure further, simply because of the short-term turmoil, also reducing our Scandinavian exposure. And our safe haven, you pointed out the 10-year Treasury. No, that's not our safe haven. Our safe haven these days is the yen, if indeed we have an announcement coming out over the weekend from Greece. And while it's only a rumor, I'd rather believe the rumor in this case than a policymaker. We have put money into the yen in order to buffet any shock that may come in the short term.
So, Axel, you'd rather believe the rumor you just said than a policymaker. So do you believe that come Monday we're all going to be talking about a Greek default and then we're going to be wondering who is next at this point?
Well, my view is more like let's get it over with. The Greece is going to default. Everybody knows that, and so let's get over that. And the banks have been reluctant to raise money. Well, let's accelerate that. Now, I completely agree with Trichet that there is no liquidity problem. A central bank can keep a zombie banking system alive. This is not a Lehman environment. You can have a dysfunctional banking system kept afloat. You saw it in Japan in the 90s. But of course, there is turmoil. And even the Stark resignation in the long term, that's a positive in the sense that it's going to be politically very difficult for these bond purchases to continue. So sounder monetary policy will happen in the medium term. But of course, as we all know, these processes are very ugly. There's a lot of turmoil. And for the time being, we're taking a step back. And we are looking forward to re-entering the euro. But it might be at a lower level than right now.
Axel, this is Peter Cook here in Marseille. I wanted to ask you, is there anything the G7 finance ministers could announce tonight that would alter your view? Could they surprise the markets?
Well, everybody has domestic issues, and they should take care of them first. And we don't need statements by G7 ministers. We need a process in place how we're going to get weak countries in line. Right now, we have that process, by the way. It's called the IMF and the Eurozone. It's just a very ugly one. Them holding hands and giving a unified statement how committed they are to the markets, well, that's nice, but that's not going to change the world. We know how difficult the politics are at home. And we also know that the bond markets are firmly in charge. The bond markets are dictating the terms of the policymakers. The bond markets are dictating the terms for the banks. That will persist. So we don't really need the policymakers unless they come up with action rather than words.
Well, or Axel, are the voters in charge? I mean, Spiegel just came out with an article saying that the FDP has really a big say in whether or not the EFSF passes. No?
No, not at all, because if you kick out a government, you just have the new government owning the same problem. Think about Spain. The opposition will sweep to power in November. Well, what happens? There's going to be a stronger majority to pass the same issues. In Germany, the Social Democrats would like to have a Marshall Plan and Eurobonds. So this process will continue no matter who is in charge. Might happen a little faster, a little slower, and the bond market will react accordingly. It's not the voters, it's the bond market that's firmly in charge here.
But, you know, yesterday, and Trichet got a little angry, but somebody said, why not go back to the Deutsche Mark? A lot of Germans would have preferred to stay with it in the first place. It was a good, strong currency. Why not go back to the Deutsche Mark?
Well, because Germany couldn't export anything anymore. There are huge benefits everybody has. The Eurozone as a whole is actually reasonably healthy. There are issues in the peripheral countries. But look at Greece. Think about Greece leaving the euro. What's going to happen is the ones losing out are the pensioners and the public sector workers. The public sector workers are going to go on strike. We're going to get inflation and hyperinflation and new drachma. Right now, they're going to default, and then they're going to get some help to rebuild. That's in Greece's interest. That's in the interest of the rest of the community. It's not in the interest of the stronger ones to leave. No, So the issue is that the drama in the Eurozone will ultimately play out in the spreads in the bond market. The reason why the euro is being sold is because of greater liquidity, because of uncertainty, and because of processes that need improvement. Long term, we believe the euro will thrive, and we haven't changed that view. But for the time being, that turmoil that we have is going to potentially put a lot of pressure on Europe, and so that's why we're taking a step back here.
Hey, Axel, just quickly, Alan Greenspan, speaking out of Mexico, said that the markets are assuming the worst on Europe. Are we right to do so at this point, or do you think the markets are overreacting? We've got quite an equity sell-off here today.
I don't know what the worst is. In 2008, we came pretty much close to the worst. The worst is not going to happen because we're not going to have an implosion of the banking or the global financial system. That's the worst for me. Having Greece default is not the worst. That's a step in a long road. And we don't think that necessarily the contagion is as bad as some people think. What happens, though, is that, of course, all these government bonds in Europe are trading like municipal bonds because they can't print their own money. Now, as far as we're concerned, we're looking at the currency. The currency does well precisely because of that in the long run. Right. Because they can't print their own money, because they don't just cover up these problems. Okay. The central bank in Europe is keeping the feet to the fire of policymakers, and that's good in the long run. This is not the worst case scenario. This is a step in the process.
We got to run. Axel Merk, good to get you to weigh in on what's going on in Europe and the euro specifically today. Should be an interesting weekend. Axel Merk over at Merk Investments.